This program is brought to you by realestate.com.au. With more homes for sale than anywhere else, realestate.com.au is Australia's #1 address in property.
Welcome back. There are 1,552 auctions scheduled this week. The numbers are a bit lower due to the King's birthday long weekend, which is occurring in most states. New South Wales will hold 631 auctions, with about 500 in Sydney. Victoria will hold about 500 auctions, with most of them in Melbourne. Queensland will hold 220 auctions, with about half of them in Brisbane. South Australia will hold 97 auctions, with virtually all of them in Adelaide. Western Australia, the NT and Tasmania will hold 23 auctions between them, and the ACT will hold 73 auctions. Taking a look at the most viewed properties going to auction this weekend, and in New South Wales, top property is 2 Fairyland Avenue, Chatswood West. This light-filled 3-bedroom home is close to the Lane Cove River. Asking price is $1.55 million. The top property in Victoria is 64 Livingston Road, Eltham. This 3-bedder is in Melbourne's far northeastern suburbs. Asking price is about $760,000. The top property in Queensland is a grand 5-bedroom home at 19 Leopard Street, Kangaroo Point in Brisbane. It was built in the 1890s and has been completely restored. The renovation reportedly cost $15 million. It's one of the nicest Federation-era homes we've ever featured on the show. Expect this one to go for some big bucks. The top property in South Australia is 24 Patricia Avenue, Camden Park. This 5-bedder has 2 bathrooms, a large backyard, and has been renovated. It's in between the Adelaide CBD and the beach. Asking price is $1.1 million. And the top property in Western Australia is 4 Bellevue Terrace, Fremantle. This home was designed by the architect Brian Clopper and built in 1981. The home blends reclaimed materials like exposed brick with large interior living spaces. It has 3 beds, 3 baths and 3 parking spots. And the most viewed property on the REA Group website this week is 42 Rossall Road, Somerton Park, in the Adelaide beachside suburb of Somerton Park. This large home was only completed this year. There are 5 bedrooms, 3 bathrooms, 3 powder rooms, cinema, study, wine cellar, gym and sauna. It's also got an underground shed, walk-in freezer, automated magnesium pool, spa and outdoor kitchen. The home has automatic blinds, keyless entry, speakers in all the rooms and mechanical ventilation. There's lots of charcoal grey stonework throughout and underfloor heating. Land size is 786 square metres and there's space to park 4 cars. Agents are taking expressions of interest. And for more on property, I caught up with Paul Ryan from REA Group a little earlier.
Yeah, it's the long weekend. Actually, really, the numbers are pretty strong, 34% higher than last year. And next week, we're straight back at it, another 2,800 auctions scheduled nationally. So really, this is a bit of a lull. There's still quite a number of people willing to auction their property on the long weekend.
Yeah, 2024 just broadly looks like there's been a lot more property sales than 2023. Is there any kind of reasons for what's driven that?
It's particularly the case in Sydney and Melbourne. There's been a big uplift in activity in those 2 cities, and it hasn't really been forced sales. We've seen more sales in locations that have seen high price growth, which points to big equity gains throughout the pandemic, enabling upgrade activity, and we're seeing that play out this year. Economic stability has played a big part in that. Stable interest rates, the economy it's slowing down, but not as quickly as people were expecting.
Yeah, obviously a lot of stock in Melbourne and Sydney, but any other big capitals around Australia that are doing pretty well right now with prices and stock levels?
So we still see the smaller capitals, so Brisbane, Adelaide, Perth, outperforming in terms of price growth. And that's been a continuation of this relative affordability, lifestyle shifts that we've seen since the pandemic. It's been Sydney that's been the big surprising one. We still see Sydney outperforming. In May, prices were up 0.4% again in Sydney, up 7% over the past year. So that's the real market where we're seeing both lots of activity and really strong price growth.
Also saw the median price of a property in Brisbane is now the 2nd highest in the country after Sydney, overtaking Melbourne. Is that a surprise to you as economic forecasting?
It is. It's been like a long time coming. There's been this big shift in preference. Lots of people moving to southeast Queensland in particular, and Brisbane prices have outperformed for a number of years now. So to see that happen, part of that represents the fact that Melbourne's done a bit better in terms of building homes and housing supply. So I mean that sends a signal to other markets. You know, housing prices being high is good for homeowners, but over the long term, we want to keep housing costs low, and that means building more homes.
Now, you also mentioned this a second ago, but this week the GDP numbers came out on Wednesday. Economic growth only 0.1% in the March quarter. Seems pretty weak at the moment.
Yeah, the economy is slowing, and that's by design. That's what the RBA is trying to engineer. I mean, just up 1.1% over the past year. That's a pretty flat economy. But consumption was surprisingly stronger than expected, so up 0.4% in the quarter. And that, relates a little bit to why inflation has been a bit stronger than people have expected and why rate expectations have been pushed out.
Yeah, I saw consumption is up, household savings ratio is down a bit. People are obviously using their savings and spending it. And they're also spending money overseas. So is this a bit of a worry for the RBA, seeing that strong household consumption number come out in the March quarter? Obviously, we're in Q2 now, and we won't get these figures for another 3 months. But it seems like Aussies with money are still spending a bit of it. And is that a bit of a challenge for Michelle Bullock and the other people there at the Reserve Bank?
I think so. The consumption numbers, there are a few one-off factors that boosted consumption in the first quarter. But yeah, these things are all interconnected. The fact that inflation is a bit more persistent than the RBA was expecting, and that's related to consumption being stronger than expected, is the thing that really the RBA is watching. They're watching consumption, they're watching the labour market. Unemployment is coming up, but at a slower pace than expected, and consumption is coming down, but again, at a slower pace than expected.
Now, let's just jump back to the housing market again. How are rents tracking right now?
Rents are still growing very, very quickly. Over the past year, they're up 9.1%. We've had vacancy rates have drifted up, so conditions are getting easier for renters, but we're nowhere near those conditions we saw before the pandemic, where rents were growing at a bit slower pace than incomes, and that's really what we need to get back to. But to get there, we need rental vacancy rates to go from where they are now, which is about 1.4%, to get back up above 2%. So it's a long road for the rental market to get back into balance.
And this might be a silly question, but when you go online and look up the amount of properties available for rent, is there a very small number of those with rental vacancies being at that such low level? Is that really the crux of it?
Yeah, fundamentally, you're looking at thousands of rental properties being available, whereas before the pandemic, we'd have tens of thousands of rental properties available. There's been a big decrease in the number of properties that are available to rent, and part of that has been fewer properties being built that have been added to the rental stock, and part of it's been rental demand is so strong that any property that's advertised for rent is snapped up almost immediately.
Oh, well, hopefully things improve over the next couple of years. Look, Paul Ryan, thanks for having you on this program this afternoon.
Thank you very much.